And then you can be speculative with the 10% rest. If you get 100x return, change your life. But the probability of getting that's really, really low. So maybe you lose that 10%. So even if I look at my kind of portfolio, I gave myself, I don't think I even got to 10%. I probably did 5% in stupid shit that was speculative. And most of it has completely failed. And I thought, no, this is a surefire winner. No, none of it. The memes I bought, all terrible. So that's okay, because I've lost 5% of my money, but the rest of the portfolio is up, X 100%.
Hey guys, welcome to Everyday Finance. The first thing that Raoul Pal does is issue a stern warning: the most significant crypto threat in 2025 is not sophisticated hackers, rather it is human error. Already this year, more than $2.4 billion has been taken, the majority of which has been accomplished through the use of phishing links, bogus support accounts, and fraudulent wallet approvals. His message is unmistakable. The foundation of crypto security is not technological expertise, but rather simple behaviors. As part of his survival checklist, he recommends replacing SMS codes with hardware-based two-factor authentication, verifying the approval of every wallet, utilizing cold storage for savings, and storing just the essential items in hot wallets. Make sure that your devices are regularly updated, that you verify addresses before sending money, and that you never provide your keys to anyone who claims to be providing support. Finally, make sure you have a recovery plan in place. This is because making preparations, rather than panicking, is what determines whether a hack is a lesson or a loss.
So in 7 years, the whole market's worth 100 trillion. So that's what, 25x from here? So then you just work that back and say, if I put 10 grand in, it's worth 250,000. So if I put 40 grand in, it's worth $1 million. Okay. But Bitcoin is not necessarily the fastest horse in the race. It's the least risky. Could Ethereum or Solana or a mix of those do that faster? For sure. So I've seen people go from 10 grand to a millionaire in less than a year in this space. Now, you're taking obscene risks in something that's probably most likely to go to zero. But, on a balance of things, I think it's very possible to do it. If you can scrape $10,000 together and invest it not so riskily, you'll do that easily. I think it's 100x return. That's a lot. Nothing else exists like that. Even building a business is bloody hard. If you're going to stick 10 grand to your business, is it worth $1 million? Might be. But you can do both if you can. Now, there are much more speculative areas where suddenly you can do that. And I don't even mind speculation. If you're young enough and you don't give a shit, and you grew up on gaming culture where you kind of get nuked in the game when you screw it up, and so you don't have the fear of loss, speculation is okay. But how I would do it is let's say you've got the 10 grand, put 5 grand in Bitcoin, and then figure out, can you take some speculative risk with the rest? So you can't nuke yourself because you've still got 5 grand in something more secure, but maybe you get the opportunity. I tell most people really to put 80 or 90% in the kind of top crypto. This is the whole don't fuck this up thesis. Don't borrow money, because if not, you end up losing your tokens, and your game is to hold them for that 10 years so you can make the $1 million or more. And then you can be speculative with the 10% rest. If you get 100x return, change your life. But the probability of getting that's really, really low. So maybe you lose that 10%. So even if I look at my kind of portfolio, I gave myself, I don't think I even got to 10%. I probably did 5% in stupid shit that was speculative. And most of it has completely failed. And I thought, no, this is a surefire winner. No, none of it. The memes I bought, all terrible. So that's okay, because I've lost 5% of my money, but the rest of the portfolio is up, X 100%. You're going to have to learn to understand your emotions. So my sister-in-law lived through this. She came to me in the pandemic. Is like, she's a typical slightly older millennial, 40. So she's like, I got this 401k. It's worth like, I can't remember what it was, 20 grand, 18 grand, 15 grand, whatever the number was. She goes, it's going nowhere. It's never going to help me. To my point, right? The financial advisors get you to invest in the S&P 500. She's like, I've been doing this my whole career. It's worth nothing. It's not a deposit on a house. I can't do anything with it. What's the point? What shall I do? Shall I stick it in crypto? I said, yes. She goes, how much? I said, all of it. She said, why? I said, because if you lose that, it's not going to change your life. You've got a job. Your husband's got a job. But this is not going to change your life if it continues like this. She's like, no. Okay. So we stuck it all in and it went up a significant amount. Then it collapsed. And I told her this will happen. And good for her. She's like, well, you told me this would happen. Feel sick. I've lost so much money on paper, blah, blah, blah. What do I do? I said, just keep buying. We'll just add more. And so she just added more. And then before you know it, her portfolio's up again. And suddenly she's outperforming. And now she feels like, hey, I'm empowered. And now suddenly, that thing's her investment's worth $100,000. It's like, now it's kind of life-changing. And if she can hang on for another few years, it'd be $500,000, $1 million. And there she's on the path to financial freedom and unfucking her future. And it's as simple as that. And I've seen that for so many people. At Real Vision, we have members all over the world, whether they're the free members that come or paid members, and they come on this journey where they don't know anything about this. They hear about it and think, I better know something about crypto and economies and how it all works. And we help them on that journey. And so many have come from, I thought my future was destroyed. I had no savings. I didn't know how I was going to get out of this, to, oh my God, I'm financially free. And it's not, we're not selling anything per se, apart from a bit of knowledge to help people in the journey. It's not like, hey, follow my step-by-step guide and you'll become rich. It's like, no, come and join this community, figure out these assets, figure out what works for you, and talk to the other members of the community. They'll help you out. Off you go. And everyone's like, oh my God, I've been so empowered. And here's how the economic machine works so you can understand why the prices go up and down. Already adopted it. Both are building on crypto rails. Because they can think that we can still charge a fee, but we can do it at much less cost to do it and much faster speed. So they're already built on it. Both of them at scale. PayPal, same. Revolut, the same. I mean, so it's happening at lightning speed where everybody's building on this. So at first they try and stop it. And then they go, there's a first mover advantage. I need to move as fast as possible.
The attention of Pal moves to the markets, where cryptocurrency futures have recently been subjected to one of the most significant leverage wipeouts since 2022 occurs. In a matter of hours, billions of dollars were liquidated, which triggered what analysts refer to as a historic leverage reset. The bulk of traders were betting on a further decline, as evidenced by the fact that funding rates have dropped to levels that are extremely negative. Contrary to expectations, however, this capitulation might be the reset that the market required. The ecosystem is finally breathing again, and it is leaner, cleaner, and ready for a more solid rebound as a result of the removal of a significant amount of leverage that was based on speculation.
You stop it from happening, like nobody's to stop it when it falls. And Bitcoin will do Bitcoin things. It's a very unique beast because doesn't have a smart contract. You can't use it for anything else. It's just a store of value. Very simple to understand in the end. And then you've got these other things, which is this whole world of the new internet, with Bitcoin as like a base layer of it all. And you have this, and it's a free market for all of it. The other thing is people don't understand is how do rich people make even more money is they get access to investments that normal people don't. So venture capital. Venture capital is you can only invest if you're an accredited investor. That means you have $1 million or more. Apparently that makes you smarter because you've got $1 million. But if you've got $1 million or more, you can invest in venture capital, and the returns have been very high in the past. That's how people made money out of Facebook, and Peter Thiel made a fortune out of Facebook. It was all venture capital. the private equity industry, private credit, all of this, not available to any of us. Yes, your pension might have a little bit, a few percent weighting here and there, but not enough to make a difference. And then crypto comes along. It generally beats venture capital returns on a portfolio level. Sure, somebody's going to get Facebook always. Somebody's going to get some of these things. So it beats the performance of all VC funds themselves generally. It's freely tradable, instantly liquid, and accessible for everybody in the planet. Okay, that's quite disruptive. And then you see the rise of meme coins. Everyone laughs, roll their eyes. This stupid shit, everyone's just gambling on memes on the internet. Well, again, if we live in an attention economy, a meme is just a encapsulated form of attention that either persists or doesn't persist. Religion is a meme. Government is a meme. Everything is a meme. Money even itself is a meme. Some persist over time. Some last 3 days on the internet as a joke. But actually what we were doing was testing at scale massive use of crypto, of blockchains at high speed. This is the rise of Solana because it's much more performant and faster than Ethereum. And so we could battle test it at scale while we all speculated and had a lot of fun doing it and lost most of our money doing it as well and saw some random friend get rich from doing it. Okay, great. What we were actually doing was testing instant formation of capital for businesses. That's where this is going, where Jack comes up with a great business idea, as opposed to going around to VCs and they take an egregious amount of your business and it's really hard and it's miserable and you get all the 1,000 no's. Give it to the world and say, do you want to back my idea or not? That Trump token created $10 billion of value in 2 hours. That is capital formation for the internet age. And anybody has access to this. We just haven't used it for that yet. That's where this is going. We're just completely upending the entire financial system for the people, by the use of new technology. So no, it was about $500 million at the time.
$500 million. What in your background made you walk away from all of that at 35, 36?
So I was a product of immigrant parents. My father was Indian and my mother was Dutch, first generation. They met on a blind date in the UK. In my blood was travel and an experience. And I found that to be one of the most important things to me was travel experience, reading books, listening to music, going to places, doing stuff that was outside my comfort zone. The answer to life is there's your comfort zone and there's where the magic happens. Those two don't overlap. The magic always happens outside your comfort zone. So I was at a shitty university because it was the only one who offered me a place because I had discovered cars, girls and booze. And so only got into one university. I managed to get through okay, graduated into recession, couldn't get a job. Eventually found myself in finance by kind of manifesting my own destiny because that's what I wanted to do and I was going to go there. And that trade-off is, so everyone goes, oh, you get so well paid in finance. Yeah, but you sell your soul to the devil. The sheer amount of pressure when you're on the trading and sales side is astronomical. The amount of hours, the travel, everything else is preposterous. And so after a while you say, okay, do I want to be the richest person in money terms or do I want to be the richest person in life terms? And when I was at university, my girlfriend at the time's mother lived in Mallorca in Spain. It's a gorgeous island. And we were staying at her apartment and we had gone to the beach. It was like Easter, sometime around Easter. So the weather was nice, not perfect, but it was nice. And somebody was grilling sardines on the beach and selling cold beer. And it cost nothing. And we went down there, sat on the sand and drank a cold beer and ate these sardines. And I looked up and there's this little mini peninsula with some palm trees, some pine trees, typical of Spain. And there's this long table of like 25, 30 people. And it's like grandparents, kids, friends, family. and they're all eating paella up there for lunch, drinking wine, having fun. And I'm like, okay, that's life. These people are living their lives to the fullest, overlooking the sea, eating simple food, having this fun. And that stuck me every day when I was on the tube at 5 o'clock in the morning to get into Goldman or wherever I was working or the hedge fund. That was the thing that I was fixated on, is how I'm going to manifest that feeling, not that exact scene, but that feeling of freedom, nature, quality of life. And that's what I went for. I went for that trade-off. So it became natural to me when I was at the hedge fund, and I wasn't having my best year. I'd had 3 good years. I wasn't having a great year. Couldn't figure everything out. And I'd had a house in Spain for a while. And that's another story in its own right. That's actually a good story. But I had upgraded that house. And I was going a lot to Spain because I bought that house, but prior I had this other house. And I was going a lot to Spain. A friend of mine called me up and goes, how many times have you been to Spain this year? I said, don't know. I said, check. I checked, said 32 times. He goes, Raoul, you're running away from something. And I'm like, yeah, I am. And what I wanted to do was actually run into this quality of life, because it was becoming so different to the other quality of life of work and stress and everything else. And you looked at that and you're like, okay, this is the trade. It's not about being the richest man. I could have stayed at the hedge fund or could have stayed at Goldman and made more money. But the massive lifestyle leap, even though I was living in a nice apartment in London, everything, the massive lifestyle leap was so worth it. Now, there were trade-offs with that in the end as well. But that whole game was kind of why it came naturally for me, because I like adventure. I've traveled to, 120 countries around the world. I've walked across deserts, climbed mountains. I've driven from Northern Europe to the central of Africa twice. I've done everything. I've been shark diving around the world. So adventure is something. Outside my comfort zone is where the magic happens. Focus on that, and your life is much more enriching.
At this moment, sentiment is changing. As a result of the first significant psychological shift that has occurred since the crash, the data from CoinGlass indicates that 54% of traders have become positive. The price of Bitcoin has increased by more than 5% since it dropped below $110,000, while the price of Ether has increased by 12% after falling below $3,800. It is possible that this big liquidation event, despite the fact that it is hurtful, will prove to be the turning point, where emotional fear is replaced by structural strength. Pal arrives at the conclusion that, similar to previous cycles, every significant washout paves the way for the subsequent durable rally. It is possible that what appeared to be a collapse is actually the beginning of the next major wave in cryptocurrency.